The biggest difference, though, I see between then and now is anyone in here think that all of crypto is going to zero? Probably not, right? We may debate what asset's going to be successful, how big will it be, what type of people are going to adopt it. Is it a financial, kind of speculation tool, or is it a technology that people will actually use in products? All that stuff's up for debate. But in 2016, 2017, like there was a real point when Bitcoin dropped from 20,000 to 3,000. A lot of people were like, this could go to zero. At the end of 2018 in December, myself and two of my partners, we issued a kind of public bet. And we said, we'll pick Bitcoin. Anyone on Wall Street, you can pick any other asset in the world for a decade. We'll put up $1 million, and whoever's asset is more successful gets the money. Not one person took the bet. And what that said to me was, wait a minute, they may publicly be not talking about this, they may be pretending like they're not paying attention, but they realize that it's an asymmetric asset. And so whenever you have this asymmetry in a financial instrument, what ends up happening is you can't count it out. And that's what we saw ultimately. So it came flying back from 3,000 to the $69,000. And so I think now people are like, okay, this is going to stay, it's going to survive in the world. The big questions now are in the United States, outside the United States. Which assets are going to be considered securities, which ones aren't? I don't necessarily have those answers, but I think that there's just more nuanced conversation.
In the mid-2010s, the discussion around Bitcoin was whether or not it would survive at all. I doubt any person who is serious and at all knowledgeable about Bitcoin would think there is even a small chance of Bitcoin going to zero today. In today's clip, we have Anthony Pompliano speaking at the FX Summit 2023 that was held earlier this summer in Miami. So, if Bitcoin isn't going to zero, it becomes a matter of economics. And with Bitcoin capped at 21 million coins, the supply-demand economics becomes easy. We know the supply. All we have to worry about is the demand. Enjoy the clip.
What do you feel like are those driving forces that either push the cryptocurrency market to start seeing a lot of money coming in or money going out?
So I have to admit, I'm not that smart. And so whenever I look at price, I just look at it as a function of supply and demand. If more people want to buy than sell, the price goes up, right? If more people want to sell than buy, the price goes down. And so the reason why I say that is I think a lot of people across financial markets, even, I spent a lot of time with some of the people who run some of the largest hedge funds in the world, et cetera. It's easy to get things complicated. And so if you actually look at some of the best investors in the world, what they have figured out is, can you tell it to me in 2 simple sentences, right? How many of you in here make investment decisions and could literally say to somebody else, I'm doing this because you get 2 sentences, no big words? That's it, right? In 2020, I came out and I had been pretty bullish on Bitcoin before. I was doing a whole bunch of different investing across different markets. And it was like hitting me over the head in terms of how obvious they are going to drop interest rates, they're going to print money, and at the same time, there's going to be a supply shock in terms of the halving. And so it was, they're basically going to push liquidity into the market and they're going to cut supply. It's going to be rocket fuel for Bitcoin. And when I first started saying it, people were like, oh, this is just like another, you think it's going to go up, you think it's going to go down, whatever. But the reason why it was so powerful to me is like, that was the simplest explanation I could think of, right? And so if you go and you look today, it's like, what drives the price? It's literally demand. Because Bitcoin specifically is a very unique asset. How many people in here know how many Bitcoin there's ever going to be? Right? How many people in here know how many Bitcoin come into the market every day? You can see it, right? And so if you know what supply is going to be, then you only have to understand what demand is doing. And is demand increasing or decreasing? So it actually, people in this market have an advantage over traditional investors, right? If you trade stock, how many of you have woken up one day and you're like, shit, these guys just issued a bunch more equity, right? These guys just did this. These guys are buying back stock, right? Like you have to worry about the supply side and you don't know what they're going to do. They don't telegraph it all the time. And so that ends up being this really interesting thing of like the price is ultimately driven by increases or decreases in demand. The hard part is it's 24/7, 365, global investor base. Like it's not just what do people in the United States think. And so if you look at an event like Turkey or Argentina, there's all these currency crises, there's high inflation, there's all these issues that they're dealing with. Those people are running to dollars, Bitcoin, anything to get out of their local currency. But they're still small markets. So it's not as simple of an analysis of like, Argentina has 90% inflation, they all want Bitcoin. Maybe. And so really what I think ends up happening, I know a lot of you guys in here are traders, I kind of just opt out of the game. I just say, look, I'm actually not smart enough to know what is the intraday or intra-week or intra-month movements of these assets. I simply want to buy this asset over time, hold it, and literally give it to my grandkids, which is like antithetical to everything a trader believes. But the reason why I think of that is you have to understand what game you're playing. And if you can trade, more power to you. Bitcoin's super volatile. That's why a lot of the market making firms, et cetera, all want to trade it. And so therefore you're able to actually go and make a profit. If you're not good at trading, the next best thing is just to hold the asset for a really long time. And so in some way, I've kind of given up on trying to understand price and just said, let me play a different game.
Now, what gives you the confidence to know, or what gives you the confidence to assume that Bitcoin will survive the test of time? Kind of looking at the regulatory environment, looking at how many attacks there are in the crypto space. And I genuinely feel like the attacks on some of the centralized institutions now are because they can't go after Bitcoin. If you can't go after Bitcoin, let's go after literally everybody else and see what sticks. So because of all of these attacks, what gives you the confidence to know that's going to be here?
So there's, I think, two different components of this, right? The first is Bitcoin is software. It's no different than iOS running on your phone or any other software program that you use. If you understand what software is, it is words written in a database, right? Boil it down to like its most fundamental thing. It's words written in a database that then is run by all these computers around the world. One big difference is that Apple or Amazon or Facebook doesn't control that database. It's instead this decentralized network. So Bitcoin will survive if literally aliens come tomorrow and kill everyone except for one person and they have Bitcoin running on their computer, Bitcoin survives, right? So from a technical standpoint, now, if there's only one person left in the world, Bitcoin's probably not that valuable, right? And so then there's the question about like, what about the resilience of price or the value of the asset? I do believe that Bitcoin derives a lot of value from being the strongest computer network in the world. Many of you probably heard me say this before. One of the critiques of Bitcoin specifically is this idea that Bitcoin's not backed by anything, right? Put aside the ridiculous arguments of like, well, neither is the dollar, but ask yourself, what is the single most valuable commodity in the world today? It's not oil. It's not, corn. It's not wheat. It's not any of that stuff. It's computing power. Computing power is the single most valuable commodity in the world. That's why things like Amazon's AWS trade at such crazy multiples if they were a separate company, is because ultimately they're no different than Standard Oil 100 years ago being in control of the flow of oil. Amazon controls the flow of computing power. Google controls the flow of computing power. It's the single most valuable commodity in the world. So Bitcoin's actually backed by the strongest computer network in the world, which means that it is backed by the most valuable commodity in the world. And so if you look at that, you say it's worth something, but the market has to decide what that value is. Now, what we do know is that right now, let's say that there's 150 million people who have raised their hand and said, hey, I'm going to participate in this market. There ain't 8 billion people, right? And so what ends up happening is that more and more people continue to come into the market. They continue to learn about the asset. As they do that, price will continue to grind slowly up as a simple function of supply and demand. And so in some weird way, Bitcoin's survival from a technology standpoint is in the decentralization, but the resilience of value ends up being in this idea that the fixed supply only has to have increasing demand over time in order for the price to continue to grow. And so when you see that, that's why I look at it no different than I look at real estate. Some of the wealthiest people in the world, I think it's, if I remember correctly, 70 or 80% of all millionaires in the United States did it in real estate. Why? Because real estate was built for dummies. Buy something and hold it, right? And when you think about that, you're like, wait, what are you talking about? All you're doing is you're converting dollars into a hard asset, and then you're just letting them devalue the dollar. And as they devalue the dollar, somebody else shows up and they need more dollars to buy that asset from you in the future. And so at the end of the day, yeah, you're making the investment decision, but really all you're doing is you're allowing the structure of the market to enrich you. And so people got really mad during the pandemic when I said literally the number one thing that we can do for financial excellence and financial health in the United States is just teach people invest. Don't finish the sentence, just invest. If you buy anything that most people would consider to be low risk, you likely will do well over the lifetime that you live, simply because they are forced to devalue the dollar. And so if you buy the S&P 500 and you forget about it and come back 30 years later, you're rich. It's that simple. If you buy real estate, forget about it, come back, you're probably rich. Same thing with Bitcoin, same thing with a lot of these assets. And so there's a study that Fidelity did, this may be like 15 years ago now. They've actually reportedly deleted it from the internet, which I find interesting. They studied all of the accounts and they were looking for what are the correlations between the best performing accounts. And you know what the answer was? People who forgot their passwords or died. Right? Which is like insane, right? But like, think about it. If you just bought a basket of stocks and left it for 20 years and came back, probably gonna be higher, right? And that's what the whole idea of the indexes, et cetera, are. And so if you think about this from the sense of Bitcoin, I do tend to think that allowing the US dollar to just continue to be devalued, like they're telling you that is their system. And so maybe it's just, I'm not smart enough to do it, but if you can just do that one thing, you're gonna be okay.